Chaudhary is the former chairman of SAIL, and we've also got Aditya Velekar, senior research analyst at Axis Securities. Thank you both so much for taking time out and joining in. I'm going to come to you first then, Mr. Chaudhary. Given that, China, it seems like as of now, not all is well over there. They have eased the monetary policy, and this is not the first time that they've taken such drastic measures in order to boost the economy. We haven't seen so much of an impact really play out so far, but I wanted to understand on the global steel market, given the close linkage, how do you see this impacting it?
Okay. In fact, China has already taken certain steps and they have announced two stimulus. One in September, followed by another one in October, and third one is under consideration. And Chinese government is hell-bent to see to it that the consumption grows within the country, and they are willing to pay any price, or they are willing to do anything for that purpose. Because they know everything depends on the domestic consumption. So sooner or later, maybe their consumption of all commodities will improve. And definitely, as they decide to go ahead with the development of the inner parts of China, I believe there will be immense requirement of materials within China itself. And as you rightly said, that whatever is happening in Chinese economy, that is affecting the consumption of steel also. In fact, there is hardly any fall in the production of steel in China. If you compare, say, April to October, just 3% fall is there, which is not very significant. And this year, again, they are going to have a production of somewhere around 1.025 billion ton, which by any account is not less production. Of course, the consumption is coming down, so they are exporting heavily. They have already increased their export by at least 23% in the last 7 months. And in the month of November also, there has been a growth of around 20%. Of course, as compared to October, their export of steel has come down. But they will continue to produce more. They will continue to export more in the coming time. So definitely there is a worry for the other Asian countries that how to contain the exports from China.
Fair enough, point taken. But Aditya is also with us in the discussion. Aditya, we have seen a couple of false starts earlier from China, right? They came out with stimulus 1.0, 2.0, didn't really work out the way we expected. Now there's additional measures coming in. What are the chances that this too might just fizzle out and not be able to increase the demand in a big way? What's your base case scenario right now?
Yeah, so the China Economic Work Conference is underway. So as the former chairman of SAIL has described, that there are a lot of issues that domestic demand in China is so far not yet picked up. So exports from China at 100 million tons, which are up 20%. Then their overall net exports from China on a 12-month basis, those are also almost 5.3% of GDP. Then domestic Chinese steel production is at 850 million ton, which is just down 3%. So all these factors indicate that the domestic demand in China is yet to pick up materially despite the stimulus measure they have taken in the month of September. So this ongoing conference, we will get a clarity of what the targets they set for calendar year 25. And if they set the 5% GDP growth rate, and what is the focus of the analyst will be on the fiscal stimulus and at the same time the fiscal deficit target which they set up for next calendar year. So far they have refrained from giving a straightforward fiscal deficit stimulus, and the fiscal deficit so far has been capped at 4%, 3%. So we will have to see whether they put a lenient stance on that and increase that fiscal deficit to 4%. So that will be one key factor which will be a key watch point for us.
I just wanted to understand from you as well, Aditya, what the outlook is when it comes to challenges for the entire metal sector as a whole. What do you foresee are going to be some of the road bumps down the line?
Couple of challenges. Number one is that we discussed the higher exports coming from China, both for steel and non-ferrous metals. And then there is a lot of uncertainty vis-a-vis the trade tariffs and what kind of decisions Trump takes when he assumes office in January. So all his policies, if they materializes and whatever he's saying that he will be putting tariffs of 60% on Chinese imports, so all these policies will be inflationary in nature, and this will put pressure on the inflation trajectory, the Fed rate decisions, and ultimately on US dollar index, and that will trickle down on the commodity prices. So two broad set of challenges. Number one is the domestic consumption growth in China, that is a concern, and then the policies of US, how they pan out, whether those will remain inflationary. So these two things, the entire sector has to navigate to through these two major news flows over a couple of months, 2 3 months, and then we will get a clear picture that how the sector will flow.
Demand as well as Trump 2.0. These are the factors to watch out for. But Mr. Chaudhary, I wanted to come back to you and ask you, let's say over the next decade, do you expect the dominance or impact of China is expected to come down gradually? Or do you think China will continue to play the most important part when it comes to the global commodity outlook?
I feel it will continue because China, they are all along been expanding the capacity, and in the coming time also they will continue to expand the capacity. Maybe they have plan of going going up to 1.6 billion ton by 2030. Already they have capacity of somewhere around 1.35 billion ton, out of which they are producing somewhere around say 1.05 billion ton every year, and they will continue to have clout on the world steel market for almost for another decade. The problem is that the difference between the largest producer and the second largest producer is quite high. Now, if you look at India's capacity, it is just 180 million ton, which I would say just how much? Say 15% of the capacity which China is having, which is, I would say, minuscule as compared to China. So even if India decides to expand it to say 230 million ton by 31, the gap will remain huge, and there will be somewhere around 1.6 billion ton or so, and India will be at 200 million ton. So you can see that there will be 8 times of our capacity. So they will continue to have a clout on the world steel market, at least for the next decade, if we talk of that period. Even if you talk of next 20, 30 years, I believe they will continue to have their dominance in all the commodities market. What to talk of steel?
All right. Mr. Chaudhary, given that Donald Trump has already announced the additional tariff on the imports from China, which could probably increase the supply of Chinese goods into the global market, what's your outlook on how this could impact the Indian steel market?
Let us wait and watch, because the statement of Trump has come with ifs and buts. He says that if the BRICS decide to go in for their new currency, then they will impose 100% tariff. And that holds equally good for other countries also. Of course, not much export is happening from Russia to US, but India has been exporting, Brazil has been exporting to US. It will affect all the markets. What I feel that in the coming time, definitely there will be this trade war is going to get hotten up, but there will be some solution. And I don't feel that BRICS would decide to go in for their own currency as they talked last year. So some impact would definitely be there, because when the new person takes over, and that too when the China and US, they are competing to get the #1 place in the world economy. So there will be some clash, but I feel maybe it will be temporary, as we saw in 2019, or as we saw thereafter also in 1 or 2 years, but it will get ironed out. But if it really escalates, that will have definitely bad impact on the economies of other countries, because China will be exporting all the more to those countries. And particularly, Indian economy may get affected if we do not take steps in time to stop the exports from China. because India is the natural consumer of most of the commodities. If we leave aside few countries, so those commodities will be coming to India from China only. So if that trade war escalates, naturally the India will be the sufferer and has to face the brunt of the trade war between US and China.
Sure. But Aditya, since we are talking about China, one needs to talk about that safeguard duty that the industry has been asking for, the steel industry, for a long time. And now we have heard, some positive commentary coming in from the ministries as well. What's your sense as to what could be the implication of that if it does come through?
Yeah, so currently Indian HRC prices are trading at a discount to Chinese import parity prices. So there is a comfort vis-a-vis adding a safeguard duty because there is some room for HRC prices to go up from here as they are trading at a discount to the Chinese landed prices. But domestically, it will lead to inflation in India if the government goes ahead and imposes customs duty, additional customs duty over and above 7.5% on Chinese imports. Then the second factor is there is no customs duty from FTA, where we have a free trade agreement with countries like Vietnam and other Southeast Asian countries, where the steel from China might be coming through these countries. So these are the issues where the cheaper Chinese steel may get into India. So the government has to take a call, keeping in mind what will be its impact on the domestic inflation, and also what kind of steel is coming from FTA and what kind of steel is coming from China. So that is their prerogative. But as far as Indian HRC prices are concerned, they are trading at a 5 to 6% discount to Chinese HRC prices, which has some room for domestic steel mills to increase the prices.
All right. Mr. Chaudhary, back home, although demand in India has been resilient, the cheaper imports from China, Vietnam, Korea have been a big concern with the anti-dumping duty measures as well suggested. Do you think that the government will react anytime soon and come in?
No doubt, exports from China, Japan, and Korea, they have been increasing. If we look at the first 7 months, around 5.7 million ton imports of finished steel has happened within the country, and most of it is from these three countries only: China, Japan, and Korea. And put together, they have exported close to 4.5 million ton. But I feel along with exports from China, the export from Japan and Korea, they are also matter of worry. So anti-dumping duties, as you know, it takes very long time. You have to go in for the investigation. You have to go for country-wise, company-wise, product-wise examination. Only you can impose this anti-dumping duty. But the best bet would be the safeguard duty. So government has been considering safeguard duty. But if we talk of levying safeguard duty at 25%, that will be too much. And the need of the hour is that we should go in for duty, but not at the very enhanced rate of 25%, because that is going to hurt the interest of the small end consumers. And there will always be resistance from the EPC, then the Engineering Export Promotion Council, and also from the chambers which are representing the this small and medium enterprises. So we have to be rational in imposing the safeguard duty so that we are able to balance the interest of the steel producers and also the consumers as well as the exporters.
Sure, yeah, have to be a bit more rational and can't put that 25% duty that you were talking about. But Aditya, just to wrap up the conversation, if I had to ask you the pecking order within the stocks at this point of time, which are the top recommendations?
So structurally, non-ferrous as a pack within metal still looks good because overall aluminium as a commodity has a good amount of exposure to electric vehicles, solar, renewable theme. So we like stocks like Hindalco, Nalco. We have a target price of 765 on Hindalco. And Hindalco per se has a good amount of expansion projects which will drive the growth in future. Then in the steel space, we like JSPL, although it's not under our active coverage, but JSPL has a good amount of long steel as its product portfolio, with 50% of its product being a long steel. And we have seen recently that long steel prices have exceeded flat steel prices, which traditionally flat steel prices have always traded at a premium to long steel. But now that has the situation has reversed. There is a good amount of demand for construction in India, and the SPL is benefiting from that. Tata Steel also, we have a buy rating with a target price of 175. Despite all these negatives we are globally, which we are seeing from China and uncertainty in US, the steel stocks, the valuations have still at mid-cycle level, and the prices have consolidated within the narrow range. So any positive news coming from China will be a kind of good bait for the price for the commodity and steel stocks to rally from this level. And all these steel and non-ferrous companies, they have expansion projects vis-a-vis their own individual names. So Tata Steel has a 5 million ton Kalinganagar expansion project. So all these will fructify in coming few years. So we think that this is a good level where the valuations are not very expensive. And if any positive steps come from China, and if the US trade uncertainties mellow down, then the prices will overall metal pack will do well in future.
All right. Thank you so much, gentlemen, for joining in and sharing with us your thoughts on what the future holds for the metal sector, the recent news flow that we've seen coming in as well.
If you like this video, then like, share and subscribe to ET Now.